accounts, prep, practice, assessment, right, practice questions, practice assessment. This assessment contains 5 tasks. You should attempt every task. Each task is independent and you will not need to refer to the answers from a previous task. Read every task carefully to make sure you understand what's required. Both minus signs and brackets can be used to indicate negative numbers unless the task states otherwise. The standard rate of VAT is 20%. You must use a full stop to indicate decimal point. For example, write 152.75, not 152.75. You may use a comma to indicate thousands, but you don't have to. You have 2 hours to complete the assessment. Alrighty. Oh, I think I'll need to open. Task 1. This task is about incomplete records and reconstructing general ledger accounts. You're working on the accounting records of a sole trader for the year ended the 31st of March 20x7. You have the following information. I'm going to say 2017 because that's just weird. Daybook summaries. Sales returns, purchases, returns, discounts allowed. Further information, office expenses, balances as at trade receivables, trade payables, VAT bank, receipts and payments recorded in the bank account. Further information, office expenses are not included in the purchases daybook. VAT is not charged on rent. There were cash sales during the year, all of which included VAT. There were no other bank transactions other than those shown above. All purchases were on credit terms. Okay. Find the missing discounts figure by preparing the sales ledger control account for the year ended the 31st of March 2017. It's a sales ledger control account. So the I hate this. The sales ledger. This is customers, which is trade receivables. And we've got pearls, right? So this is an asset. So trade receivables. So balance brought down is 22,600. There were cash sales during the year, all of which included VAT. 670. Amounts from credit customers. Bank is 241,500. Okay, so we've got sales returns. There were cash sales during the year, all of which included VAT. Receipts and payments recorded in the bank account, so amounts from credit supplied, credit customers. Rent paid, office expenses. There were no other bank transactions other than those shown above. So there was no cash sales because there's no cash sales showing. One thing I'm gonna do, so in the bank. 1725 plus 241,500 minus 188,550 minus 89,11 minus 11,472. Okay, so wages 20. Okay, find the cash sales by preparing a summarized bank account for the year. Okay, yeah, that makes sense. I was like getting really confused here. Bank debit. Balance brought down 1725. And if there's gonna be a credit, then the balance carried down would be 1917. Amounts from credit customers. That's money in. Sales ledger control account. 241,500 purchases ledger. 7 minus 241 500. Okay, let's do it one more time. 8 minus 5 minus 2 Right, so cash sales. So sales. The daybook. So 246 minus 225780. This is the sales daybook. This will be the sales returns daybook. Right, so 241 500 plus 2520 plus 24670. That's 268 690 22600 plus 225 780. That doesn't make sense. I would have thought discounts allowed would have made it less. Receivables. calculate the amount due to HMRC as a balance carried down. And we're to calculate the VAT element of the discounts allowed, which you showed in part A. Okay, so you've got discounts. Oh, hang on, VAT. A credit balance 2215. Brought down. VAT balance brought down. Right, so that means we owe them so we've got bank for that payment 7,650. Oh gosh, discounts allowed. Alright, so we've got discounts allowed. Right, so we got 325 plus 65 is equal to, yeah. We've got cash sales. Is 2,700 divided by 1.2 3450. Right, I've dealt with that. Right, so sales. 20. Purchase daybook 32,800. Turns 640. Discounts allowed. Office expenses. That's money they want us. Office expenses 1912. No VAT on that. Right, 7,650 plus 65 plus 420 plus 32800. 1912 472215 plus 3450 480 plus 640. Okay, so this is 46785 minus 42847 3938. A balance carried down. Alrighty, this task is about calculating missing balances and the preparation of financial statements. You have the following information about a sole trader. The trader doesn't know the value of the trade receivables. Note, trade receivables is the only missing figure from the assets and liabilities. Okay, non-current assets. Cost. So that's 79275 minus 47565. Inventory plus 33972. Debit balance. Trade payables. That is accrual of expenses. Capital. 022. Trade receivables. 8650. Sales for the year to 31st of March. Was that purchases? Was that a markup of 50% on cost was used throughout the year? Oh gosh, that's so hard to remember to do this. Calculate the value of the cost of goods sold for the year ended. I'm just gonna have to wing this and make it up because I'm not sure. Okay. Sales for the year was that much. Calculate the markup on cost. So if you do 117,300 divided by 1.15, 102,000. Calculate the value of the cost of goods sold. Calculate the value of inventory. Right, that's been sold. Purchases 103,400 minus answer equals plus 33972. 35372. The bank statement at the 31st of March shows a positive balance, i.e. not overdrawn, but the cash book shows a credit balance. Which one of the following could explain the difference? A payment to a trade payable has been omitted from the cash book. Bank charges have not yet been posted to the cash book. Checks sent to suppliers at the end of the month have not yet been cashed. Checks received from customers at the end of the month. Oh. Have not yet cleared. No. Checks sent to suppliers at the end of the month have not yet been cashed. That one there. Which of the table below, complete the table below to show what source information you would use to find each of the missing figures. You should use only one source information for each missing figure. Missing figures: a physical count, a sales ledger control, purchase ledger control, gross sales margin, closing inventory. Sales ledger control. Sales ledger control is credit sales. Credit purchases, gross sales margin, bank statement, gross sales margin, total purchases. Your manager asks you to prepare some limited company accounts. This is something you've never done before and have only just started this in your AAT studies. What should you do? Try to do your best and struggle through? No. Ask your friend who's doing the AAT course with you to help? No. Tell the manager that you need training before you can complete this work. This task is about preparing financial statements for sole traders. On the next page you have the trial balance for a sole trader, known as Harry's Hardware. All the necessary year-end adjustments have been made. The following accounting policies are used by Harry. Sales revenue should include sales returns, if any. Purchases should include purchases, returns, and carriage inward, if any. Calculate the sales revenue figure to be included in the statement of profit or loss. For Harry, is that really as simple as it sounds? Right, so sales revenue minus sales returns. Alright, so we've got 225,830 minus 1260. 224,570. Purchases, purchase returns, and carriage inward. Purchases 131,264 minus. I'm not seeing any purchase controls. Carriage inward. Oh. On the page after the trial balance, prepare a statement of profit or loss for Harry's Hardware for the year ended 31st of March. If necessary, you assign indicated only the following: deduction of an account balance used to make up cost of sales, a loss for the year. The deduction of an account balance used to make up a cost of sales. Okay. It's only 5 tasks, that's 6. Okay, I'm half an hour in. Right. Accruals. Nope. Allowance for doubtful debts. Nope. Bank. Nope. Capital. Nope. Depreciation charges. Yes. Drawings. No. Interest paid. Yes. Yes. Loan. No. Nope. Opening inventory. Prepayments. Nope. Purchases. Purchase control ledgers. Nope. Rates. Rent. Sales return ledger is a nope. VAT and wages. A sales or revenue. Is 224,570. gosh, this is where I don't remember this bit here. Cost of goods sold. Alright, add. The allowance for double debt adjustment. Oh no, the VAT is nope. This is allowance for doubtful debts. Adjustment is 400. Depreciation charges. $790. Interest paid. $1,275. Irrecoverable debt. $5,440. Opening inventory. Purchases. Rates. Rent. Wages. Okay, so we've got purchases. Which way round is it? The cost of goods sold. It's opening inventory plus purchases minus closing inventory. Plus purchases minus so the carriage inward has been dealt with. Closing inventory 1,690. Opening inventory. Purchases. So I got sales returns. Purchases. 137. Right, so if I use a minus sign to indicate only the following, the deduction of an account balance used to make up cost of sales. Cost of goods sold. Right, so we've got 8800 plus 137,1164 minus 11690. 134,874. So I've got 224,570 minus, so it equals 8969. 275 plus 5444 plus 911 plus 7270 plus 39830 72305. So we've got 224. Oh, you got 89696 plus 400 minus 72305. There we go. Identify whether the following statements are true or false by putting a tick in the relevant box on the table. A trial balance will show a closing inventory balance in both the debit and credit columns except where it is included in the cost of sales. True. The trial balance will include a figure for profit or loss. False. An accrual is a non-current liability. False. A bank overdraft is a current liability. True. It's like one statement on the table below, just true. An irrecoverable debt is a current liability. No. An irrecoverable debt is an expense on the statement of profit and loss. An irrecoverable debt shows as a credit. Nope. An irrecoverable debt is added to the figure for the provision. No. This task is about the knowledge and understanding underpinning final accounts preparation. Complete the following table. Which one of the list below is a benefit of running a business as a limited company? There is unlimited liability. No, owners of business have control over the business. Complete sentence. The responsibility of ensuring financial statements are sent to Companies House annually lies with, I'm going to say, the directors. Who owns a public limited company PLC? The shareholders. Who is responsible for the activities of a charity? The trustees. Complete the following sentence. An incorporated charity must register with the Charity Commission. Oscar in Scotland. What do the following international accounting standards cover? Not a clue. Material misstatements with the person or group are most likely to suffer the consequences. Profit has been overstated. I'm going to say, what's the difference between a potential investor and a potential lender? Assets overstated. I'm gonna say that sales understated. There we go. I am getting there. Right, this task is about accounting for partnerships. You have the following information. Jack, Joshua and Jasmine have been in a business partnership for many years. On the 1st of September, Jack retired from the partnership. He agreed to leave 20,000 of the amount due to him as a loan to the new partnership. The remainder will be paid to him from the partnership bank account. Profit share effective until the 31st of August 2016. Profit share effective from the 1st of September. Goodwill was valued at 68,000 on the 31st of August. Goodwill is to be introduced to the accounting records on the 31st of August and then eliminated on the 1st of September. At the start of business on the 31st of August, Jack has a capital account with a credit balance of that much and a credit account of debit balance of, oh gosh. This is all stuff I do not remember. Okay, partnerships. Gosh. Crikey. I might do this one next. Oh, that's maybe not any better. Okay, let's just do this one then. Prepare the capital account for Jack and the partner who is retiring. Oh, the partner who's retiring. Showing clearly the amount to be paid to him from the partnership bank account on the 1st of September. The capital account for Jack. Okay, so this is the bank. At the start of business on the 31st of August, Jack has a capital account with a credit balance of 67900. 67900. Credit balance of that much and a current account debit balance of 100. Right, so there's 100 over here. Okay, current account. Okay. So we got that dealt with, we got that dealt with. Okay, so there'll be a loan of 20,000. Right, so goodwill was valued at 68,000. So Jack gets 45% of that. 68,000 times 0.45 is this is goodwill. Right, so we've got 67900 plus 3600 98500 minus 100 minus 20 78400. Identify whether the following statements are true or false by putting a tick in the relevant column. When a business partner retires, stroke, he or she is entitled to a proportion of any goodwill. I'm going to say true depending on the contract. A partnership agreement will state the amount of goodwill to be added when a partner retires. I'm going to say false because it's not added. When a business partner retires, the balance on the current account will be transferred to the capital account. True. When a business partner retires, the amount due to that partner will be shown in the partner's current account. False. You have the following information about another partnership business. The financial year ends on the 31st of March. The partners at the beginning of the year were Ajit and Beta. Candy was admitted to the partnership on the 1st of October 2016. A summary of the partnership agreement. Partnership agreement effective until the 31st of September. Partnership agreement effective from the 1st of October. Under both agreements, partners are allowed interest on capital. This has been calculated as follows. You may assume interest accrues evenly across the year. Profit for the year until was that much before appropriations. 6% of the profit was earned in the period before Candy joined the partnership. Okay. Prepare the appropriation account for the partnership business for the year ended March 2017. You must enter zeros where appropriate. Do not use brackets, minus signs, or dashes. Profit for appropriation. Right, profit for the year ended was 9,600. 60% was earned in the period before. 60% of the profit was earned in the period after Candy joined the partnership. So we got 96000 times 0.6. Minus 57600, 38, 400. Profit available. Profit share. Okay, there's salaries. Salary entitlement per annum. Right, so we've got Ajit is 26,000. I'm not sure how that's handled. Partnership agreement effective from the 1st of October. Because, right, so 31st of March. So we've got April, May, June, July, and August, and September. We then have October, November, December, January, February, March. Okay, so it's bang on halfway through the year. So if she's due to get 18,000, it would be 18,000 divided by 2, 9,000. I could have done that in my head. Interest on capital. Right, so what's this? Under both agreements, partners are allowed interest on capital. This has been calculated as follows. That much for the 12 months ended then. And distributed. So 650. One 1900. So 1900 divided by 2. 950. Divided by 2. That'd be 700. Yep. Already profit available for distribution. 96123 minus 26000 minus 21000 minus 9000 minus 1900 minus 1400 minus 650. 38400 minus 13,000 minus 10 minus 950 minus 700. 13250 5600 minus 19,000 minus 10,500 minus 9123 minus 950 minus 700 minus 650. 800 plus 13250. There go profit share. The profit share 60% to Ajit. 13250 times 0.6. 7950 and 40% to him. 13250 times 0.4. Total profit distributed plus 950 is equal to 13250. And then we have got 40%, so go to 22800 times 0.4, 9120 plus 7950. The pizza is now 35%, 0.35 times 22800, 7980 plus 5300. 280, and then we've got 25.25 times 22800 plus 7980 plus 9120. And we've got 5700 plus 13280 36,050. Yeah, okay, so that all adds up. Okay, task 6. This task is about final accounts for partnerships and an introduction to reporting regulations for limited companies. You're preparing the statement of financial position for the Phelps partnership as at the 31st of March. The partners are Fred and George. The final trial balance is shown on the next page. All the necessary year-end adjustments have been made, except for the transfer of £34,080 profit to the current accounts of the partners. Partners share profits and losses. Measure 2-to-1 with Fred taking the larger share. Calculate the balance of each partner's current account after sharing profits. Indicate whether these balances are credit or debit or credit. Right, so start of all, the final balance. Let me just double check this. So if it was let's go back to here. Current account balance, debit balance. share the profits and losses with the ratio 2 to 1. So we've got 34,080 divided by 3. Right, let's look over here. What do we have? Right, so we have current account. Fred is 172. So we've got minus 172. 22548 credit, and then George is 200. 200 plus 11360. Or is it? That's money they've already been paid. Oh gosh, I am not quite sure. As at the very first, you need to use the partner's current account balances that you have just calculated and then use template on the next page. That's the point, it's not taken from that, it's taken from that. So, I think it's this one. I'm gonna take that, like, standard. Non-current assets. Office equipment 26000 11340 26000 minus 11340. Inventory 18024. Depreciation charge. Nope. Disposal of non-current asset. No. Oh, was I gonna this? Nope. Opening inventory. Nope. Prepayments. 960. Purchases. Nope. Purchase control. Ledger control. Rent. Nope. Sales revenue. Nope. Sales. Ledger control. 33,968. Stationery note. VAT. Wages. Nope. Total current assets 10,676 plus 18,024 plus 33,968 6,3,628 1,392 plus 2,160 plus 1,3,356 plus 3,272 63628 minus answer is equal to 3448 plus 14660 8108 plus 14400 22548 plus 11560 plus 24000 plus 11560 2596 22548 2148. Which of the following statements are true for a limited company? Expenses can be summarized by nature or by function. Dividends are shown in the statement of profit or loss. Retained earnings is the value of sales for the year. No. Tax expense is shown in the statement of profit and loss. Oh gosh, I don't know. I think so. I think so. That's a no, and that's a no.